Today's top S&P winner, meanwhile, Arista Networks, the cloud networking supplier, hit a 52-week high today after beating earnings expectations and providing higher than expected guidance. The company also getting some upbeat reaction following the report. Morgan Stanley upgrading its rating to overweight, raising its price target to $220 a share from $185. KeyBank and JMP also raised their price targets. Joining us now is Jayshree Ullal, the CEO of Arista Networks. Jayshree, welcome. What were investors getting wrong when they assumed that the CapEx spending of Meta, that getting a little tighter, was going to hit you guys?
Well, great to be here, John. Thank you for having me. When you look back at our stock, we've always had a lot of volatility. And last week, when Meta announced their CapEx was slightly reduced, we took a beating with that. But as you know, volatility is something we planned for. And last quarter in our earnings, I had already said a certain cloud provider had provided lower guidance, and we have factored that into our forecast. So it wasn't a new piece of data for us, nor was it a surprise. We'd already planned for it and planned it in our forecast and our guidance. And it played out exactly that way.
And at the same time, your gross margins are coming in stronger than a lot of analysts had expected. So it's kind of like a double surprise for some to the upside. How are you managing those? And what is it that customers are demanding from your technology stack that's allowing you to continue doing that?
Yeah, that's a really good one. Well, first of all, I want to give the team credit where credit's due. Last year, we had a very painful supply chain crisis where we couldn't get the parts. And even when we got them, they were, 100 to 1,000 times the price. And we were really filled with shortages. And the world has certainly changed. We're getting our fair share of components, and that's allowed us to normalize both our supply, improve our lead times, as well as improve our gross margins. Couple that with the fact that we're getting a lot of momentum from an alternate sector of customers that we call the enterprise. So we sell to a lot of the large cloud titans and now the enterprise as well. And so the margins was a nice mix of both types of customers to give us an improved 100 basis points or so more than we were expecting.
From a big picture perspective, help investors understand how the AI era changes the networking needs in data centers and in these cloud providers. When you got to move so much data around, sift through it, do that continually to solve problems, what's the different sort of need that you have of the equipment?
Yeah, no, this is one of my favorite questions, and AI has really come upon us like a storm lately. If you just step back and look at Arista's strength, let me start there. We've been, as you described us, known as a cloud networking company. And most of that meant we were processing data from compute and storage clusters and connecting a lot of them up and powering some of the world's largest networks and Microsoft, Meta, and so many more. And that was what we've been doing the last decade, and that has fueled a lot of our growth. Over the last couple of years, our customers are now planning their back-end network. And what's a back-end network? It's sort of a cousin or a sibling to the front end, where that data you just mentioned in the front end now has to be crunched and processed at much higher rates. And it's very compute intensive. It's very, very data intensive. And you're using these large GPUs. And, AI, whether it's generative AI with inference or large language models and training, requires a tremendous number of processors to crunch that data. And you're doing this in a cyclical way over and over again. There's a compute function, there's an exchange function, there's a reduce function, and all of these collectives are adding tremendous bandwidth requirements on the network. Now, if you don't do that right, you could use up very expensive cycles of compute time and have a lot of idle time. And so the network is critical to use your compute and therefore your AI applications to its fullest. Otherwise, your job completion time can take much, much longer. And the latency is as long as the largest culprit in that job completion. And finally, so the network is pivotal.
Okay. But finally, how confident are you in your view of inventories right now? We've heard some things about stockpiling of those AI chips that are part of the systems that you're talking about. Is there any risk that your equipment as well is being stockpiled?
Well, we always, a few years ago, we took a multi-year view on this. Our board of directors approved a multi-billion purchase commitments. I wouldn't call it stockpiling. I would call it just good, prudent forecasting and planning. And so we've been buying chips for multiple years so that we could address the AI as well as the cloud and the enterprise customers. So I think that's played out well. Obviously, the forecast isn't exactly always the way you plan it, and there's different kinds of mix. But we're very comfortable that over a period of time, we'll be able to fulfill all these orders. And especially as the supply chain improves, we can really get on our front foot and make more of these available.